Good morning, everybody. Happy Monday. It's July 27th, 2026. About 8:45 this morning. Great to be with you all today. My name is Bob Lang, and it's time for our Daily Bites. And yes, it's raining tacos. Tacos over the weekend. It's been a taco weekend. So it's apparently President Trump has backed off the bombings for the time being. And well, they have a new indicator that just came out recently called the taco indicator. Nomura came out with this indicator. Let me show you what that looks like here in just a second. And apparently it had reached a high level that we hadn't seen since March. So, this it was apparently time for a rally. So here, let me show it to you right here. Here's the new taco indicator by Nomura. And when these red bars hit a spike up here, it means that the strong chance of a taco is going to happen. Markets go down. Markets were down a lot to the end of March, and all of a sudden you got a taco, and all of a sudden that came down. When we're down here in the blues, no chance, hardly less of a chance of a taco happening and reversing the market. So we hit levels last week that we hadn't seen since back in March. And, of course, this is a rather unscientific sort of analysis. But listen, we know that the market is kind of schizophrenic right now. People are just trying to grab a hold of something, anything to help them make a little bit of money to the upside if they possibly can, and grab onto any theory or reasoning for why the markets are going to do what they're going to do, and maybe try and get ahead of it a little bit. So this is probably a good way of trying to attempt to get ahead of the market move. So again, if you saw this last week and you said, well, it's time to take a bet on the other side of the market, which would have been the upside, you're gonna benefit today with the S&P futures, of course, up about 66 handles. The NASDAQ up about 400, regaining some of the losses from Friday. Dow Industrials up about 615 handles, 615 points over here, putting it above 700 right now. So pay attention to this Nomura taco indicator. I don't know what the components are that go into it, but apparently it seems to be pretty spot on here, and with some good data here. Again, this is not anything you would use solely on your investing or trading thesis, right? It's maybe just one component of several that will help you make a good decision, a good choice to get in. And if you want justification, well, this is probably good justification for getting long or getting short this market. So anyway, that's enough of that. So let's talk a little bit about the markets here. S&P 500. Let's show that chart over here. Looks awful here, right? It's been making lower highs, lower lows over the past couple of weeks. I'll zoom in on that for a little bit for you. And you can see that we have good support down over here in the 7250 range. 7300 we bounced off of in late June. But we rolled up and went higher and rolled back over. It made a lower high in the process, right? And we've been making lots and lots of dojis here over the past couple of weeks, which is just indecision for the markets. We were close to the lower Bollinger Band over here, which normally you see the shorts kind of backing off when we get down to that low level over here. But see, the bands are kind of contracting here right now. You see the lower band is moving up and the upper band is moving down. So that's contracting. It means what? It means that volatility is starting to contract as well too. And when you get these low levels of volatility here, that means there's going to be a big compression move happening. It's not going to happen yet. We need to see several more days of compression in the markets, which means what? Narrower ranges, right? We're going to see narrower ranges. So even if today is a 66 handle move to the upside on the open, we may only move down 10 points. We may move up 10 or 20 points, right? So that's a pretty narrow range, even though the markets have gapped up, right, on the S&P 500. We see gold up a little bit, same with silver. Crude's getting slammed, obviously, because of the news here, but we've been here before. We've done this, right? And oftentimes when we see the markets rallying on the potential of some sort of an agreement. There's a rug pull that happens just days later. So I'm in the camp of you got to prove it to me right now until the market says yes, we have an agreement and we can move higher from here. Investors Business Daily, my good friend Ken works over there, Ken Creve, and other people you can see over here. Where did they put the market? They put the market basically in correction here, right? The S&P 500 and the NASDAQ weak. Also seeing the IWM, the Russell 2000, small caps landing right on the 50-day moving average on Friday. So they're suggesting that 0 to 20% of your capital should be invested in the stock market right now, 0 to 20%. So that effectively saying that they're seeing the market is in a correction right now. So, and that being said, market's in a correction. You know that rallies like today are likely to be sold. Now, is it going to be sold today in the first hour or two? Probably not. There's going to be some short covering going on. Plus, we have interest rates are down sharply today. We see the U.S. Treasury 10-year yields are down sharply, and the volatility index is down a bit this morning. It's off of the lows of today, but still, it's meaningful, and it simply means that some of that war premium that was built into interest rates and also into volatility has been coming down. Now, we have noticed there's been a close relationship in movement between the 10-year yield and oil, right? When oil goes up, the 10-year yield goes up. When oil goes down, the 10-year yield goes down. So we should not be surprised this morning to see that yields are down when oil is down $5 today, right? So they seem to be moving in tandem. In fact, you want to take a look at that. I can show it to you on the chart. Let's take a look at WTIC here. WTIC here. And then down over here, we've got TNX. So take a look. Take a look at it. See, they kind of move in tandem over here. Well, this is WTI here. Okay, there we go. You can see they kind of move together, right? They're not close together, but they're pretty similar together. I'd say the correlation there is probably better than 85%, which is a good, strong relationship between crude oil and interest rates. We can see that was somewhat established back earlier in the year. And you can see that when rates were going up, so was crude. When crude was going up, rates were going up, et cetera, et cetera. So that relationship still exists here today. I also wanted to show you some breadth indicators. We saw a big shocking low on the new highs, new lows, more than 100, but that corrected on Friday. We're back into the slight positive, but still, this indicator is neutral. It is not on a buy signal right now. So pay attention to new highs, new lows. The breadth indicators have been pretty weak over the past month or so. We've seen a good rise in put call ratios as well, too. So that is also something we need to pay attention to. What does the rise in put call ratio mean when the S&P 500 is moving the way it is, and then we've seen some individual stocks moving higher? It simply means that people, big hedge fund managers, big mutual fund managers, banks, and so forth, they're buying individual stocks, yet they're hedging with S&P 500 futures and NASDAQ futures as well too. So they're buying puts on the indices, right, or they're buying puts on the futures, yet they're still buying stocks just in case as a hedge. So I think what we're experiencing right now is something I talked with Chris Versace about last week on the podcast, is that there's a fear of missing out. It's very, very strong right now. The fear is that people are going to miss that taco trade like over the weekend, right? They're worried that this has been happening about 8 or 10 times already. And I think people finally get sick and tired of sitting out and waiting for something to actually happen. And they're trying to guess which direction the market is going to go and what President Trump is going to say and what kind of influence that is going to have on the markets. It's simply an irrational way of analyzing the markets and trading. But, it's something that a lot of emotional people, people who have stacked up some losses over the past couple of months, are trying desperately to get back and make money, right? So I think the best thing you can do is stay true to what you've done for a long time. If you're a trader like me, and you follow the indicators on the charts, you follow the options flow, and you pay attention to the news around you, and don't deviate from what you've been doing. Yet just simply look at the other things like this taco indicator and just say, look, okay, well, I'm aware of that, but it's not going to be that influential on my decision making process. Then that is the best way to go. All right. Big week of earnings, right? Of course, big week of other stuff as well, too. We have the Fed meeting, which starts tomorrow. It's a 2-day meeting, Tuesday and Wednesday. The Federal Reserve Open Market Committee will be making a policy decision on Wednesday. More than likely, they're going to leave rates where they are, but I suspect there's going to be some strong hawkish language coming from this, either the statement and or Kevin Warsh's press conference on Wednesday afternoon at 2:30. So expect to see some big movements from that. We also have a heavy week of earnings. 1/3 of the Dow Industrials and 1/3 of the S&P 500 will be reporting their earnings this week. We have names like Apple and Amazon on Thursday, Meta and Microsoft on Wednesday. So those are 4 of the 7 Mag 7 names. The other 2 of them names reported last week, and they were dismal response to the earnings. So it was Alphabet and Tesla. We'll have NVIDIA late in August. That would be the 7th one that will be reporting then. Later this week, we'll also hear from Robinhood, ARM Holdings, ExxonMobil, and Chevron, 2 Dow Industrial names. We'll hear from Coke tomorrow morning, Boeing as well, too, which is another Dow Industrial name. We have Flex, Tronics, Chipotle. So a lot of names that could have some influence. Visa and MasterCard as well, too, along with Applied Digital tonight. Celestica will be coming out tonight. PayPal in the morning. UPS also in the morning, along with Corning and JetBlue. So lots of industrial names, lots of names in technology to be paying attention to that could give us a lead into what the rest of the summer is going to look like. Don't forget, Friday is the last trading day of July. We have 5 trading days left, and NASDAQ's just getting belted this month. It has a long way to go. I think it's down about 6% so far in July. It's going to have a long way to go to get back to green, but we do actually have negative readings in the other indices. Not so bad, 1.5 to 2%. Mostly in the Russell 2000 SP 500. Let's take a look at that Russell 2000 here for a second. I want to show this to you. So it's kind of in a prove it to me mode over here today, right? So we're the Russell 2000 closed on Friday at 291. The high on Friday was what, 293.97. So we're going to open up a little bit higher than that this morning. We're going to see if that test of the 50-day moving average, which was on Thursday and Friday, tested it the lows of the day, and also the close on Friday, if that's firm or not. If that's firm and we get a pull back down there, we can make a higher low and then a higher high today, then that's going to give you something to work with. Now, of course, there's a little bit of resistance here at about the let's call it 297 level. We have the 20-day moving average at about 295.86. That's going to be some resistance as well, too. So it's not going to be a straight line, but certainly there's something to work with and pay attention to. I think a breakout on the Russell 2000 above 297.5 would be something I'd be looking for to buy, and that could happen over a couple of days, right? So pay attention to that Russell 2000. Folks, that's going to be it. I'm going to lay it down over there, but just two quick notes. First of all, I will be on Schwab this morning at about 11:30 Eastern time with Marley talking about Seagate and KLA-Tencor earnings preview. Pay attention to that. Watch that at schwabnetwork.com. And let's see, where's that? I'll show you where that is. Schwab. There you go. Nicole's on there right now. Go to schwabnetwork.com and you'll be able to tune in about 11:30 and see me there. And the last thing is the Summer Chat BOGO, the buy one get one free of summer for the summer savings for the chat room, the famous great chat room that we have going on. I tell you what, it's one of the best places, and even Brad in our chat room, who been to a couple of our trading events in New York City, talked about how great this chat room was a couple of days ago. And I can't tell you how much more proud I am of the people in the room and the discipline that they demonstrate. the trading ideas that they come out with, and everybody in the room participates in one way or the other. And it's a great place to be. This is your chance to get in for half price right now. So I think this sale is going to be going on for about another week to the end of July. If you don't get in, you're going to miss out on a chance to at least follow what we're doing in there for a couple of months. $169 is the price for 2 months, not for 1 month. Go to the website explosiveoptions.net and buy the 1 month and get a month free. These sales don't come along too often. I think the last time we had the buy one get one free on the chat room was about 4 years ago, and we did real well with it. We kept a lot of people in the room because this is a great place to be, and people don't really want to leave. It's a politics-free trading room, and it's all about trading. It's all about investing, all about technicals and options flow and that sort of stuff. We do talk a little bit tangentially about some things that may influence trading in markets if it has some influence from politics, but we don't really talk politics in the room. That's for other places and other people to discuss. So if you want a place that is just strictly talking about trading options and investing and we talk about leaps, we talk about lots of different things, then come to the chat room and I'll see you guys there today. I'm there every day and putting new content in there, new information, talking about charts. I ask questions from everybody. Sometimes I even post a video in there about what's happening intraday. So hope to see you guys all there and have a great day. I appreciate all you spend a little bit of time with me. I'll be back on Thursday. We'll talk a little bit about the Fed meeting with the decision, some of the earnings that came out on Wednesday night, Microsoft, Meta, Robinhood, and some of these other names, and give a preview of what's happening for the rest of the week. Thanks again, and I will see you guys all on Thursday. Take care. Bye.
It's raining tacos from out of the sky. Tacos, no need to ask why. Just open your mouth and close your eyes. It's raining tacos. Tacos out in the street. Tacos, all you can eat. Lettuce and shell. Tenant made by Britain.